National Insurance Clearinghouse, the marketing arm of Brokers Alliance, presents a Bravo video event, the Business Insurance Zone, dedicated to financial professionals who use insurance in their practice.
And on today's show, Charitable Giving 2011 with CPA Ken Davis.
And now the host of the Business Insurance Zone, the whiz of the biz, insurance columnist Steve Savant.
Well, welcome everyone to the Business Insurance Zone. And of course, you can see us. Merry Christmas to us and Happy Hanukkah and all the holidays that I could put on the show. I'll try my best. I want to welcome you to our show. We're broadcasting live to a national network of financial advisors from Fountain Hills, Arizona, home of America's largest fountain. And this week, as we had last week with our end of the year planning, I have Ken Davis back again, CLU, ChFC, CFP, and CPA. Ken, welcome back to the show.
Hello, Stephen. Good to be here.
Well, we're kind of doing end of the year planning still, but in a whole genre. Today and all this week, we're going to be focusing on charitable giving. Now, so many of our producers are saying, well, why is that part of learning how to penetrate high affluency markets, small businesses? Why am I doing this? But this really is a great launching pad for a marketing campaign into people you normally may not be able to get hold of.
That's exactly right.
So talk a little bit about that, and then we'll get into all the things that we can do. And I mean, this week, you'll want to stick around. And by the way, a little side note before we get going, we have a report. Ken has it. Ken, why don't you show everyone our report? This is a huge report, this 2010 study of high net worth people who give money. If you want it, just write us, www.brokersalliance.com/charitable giving. You can get all our shows, all 5 will be out there, including this report. It's really great, isn't it, Ken?
Yeah, look how thick this thing is.
Yeah,
like 75 pages.
And Ken read this for his recreational reading on his toilet. I just want to say, Ken reads everything.
And just so our listeners know, this was done by the Center of Philanthropy at Indiana University. So this is real stuff. This is real information that's useful. Now,
were you surprised at the amount of money that is being given away by people who have serious money to do this?
Actually not. Our listeners don't understand that a lot of very wealthy people, in fact, the study shows 98% of high affluent clients are giving. And depending upon net worth, they do it by income and by net worth. From $2 million up is like over $60,000 a year, and that was in the bad economy. It used to be like $90,000 a year. And then as high as $450,000 for net worth people from $5 to $20 million in net worth. So people do get up there, and a lot of times they get concerned about giving too much money to their kids. So they say, okay, it's okay for Johnny and Susie to have $2 million each, but the other $20 million is going to charity.
Now, there are tax deductions and reasons to do this. I know we're doing it, we're talking about charity, and we're doing it at Christmas time and the holidays, and of course we're hoping for the spirit of benevolency, but I don't mind taking out Uncle Sam anytime I can do it. So,
well, absolutely. A couple things. I've always enjoyed being involved with charitable giving and community activities. And I think anybody that gets excited about what we're going to talk about today has to have some sort of a passion for giving and community. And I think if you try to go in and market this without that kind of desire and passion, you'll fall flat on your face, because these people have radar for this kind of thing. So if you have a natural inclination to doing good in the community, this is really a good place for you to be. And what a lot of people don't understand is that we can do cool things where our clients give away money, get a tax deduction, and they can turn around, and here's where we come in as insurance people, is we can do wealth replacement trust. It's a lot like an irrevocable life insurance trust, but we're using the money to fund the life insurance to replace the gift or a portion of the gift. And in addition, you can leverage purchases of, you can do endowments. In other words, putting money away, giving it to a charity that sets up a fund that pays out 5% of what's put in there. So if you have $1 million in there, it'll fund $50,000 a year if it's managed properly going forward. It may even grow.
Well, I'm curious, and I think some of our producers would be, Ken, you said for us who are insurance, I mean, have you crossed over?
Well, of course.
Now remember, Ken was the former president of the CPA Society here in Phoenix and has taught at the state level of the CPA Society. And oddly enough, all he taught on was life and annuity issues, taxations, topics, subjects of that nature to his fellow doubters, I have to say.
Well, and the reason I think it can speak to them is because there was a time early in my career in financial services, I wanted nothing to do with insurance.
What?
I had been burned by a couple of insurance agents that had done improper things for me. So I really didn't like them.
Well, this is your time to revenge, Ken, because if you want to tell their names out here.
Yeah.
Okay,
No, one of them was a relative of my ex-wife, so that would get me in real hot water there. So we're not doing that.
But I'm amazed though at you really have. You're kind of like, as I said last week, you're kind of like the ambassador between the two worlds, right? You kind of have the economic diplomacy, right, to go back and forth. But I think our producers really appreciate you being on the show, not only being a CPA, but being a certified financial planner, and then our side of the fence, CLU, ChFC.
Yeah, well, what's interesting is, the different cultures. CPAs are all hourly fees. It's been, jammed into their brain since the first accounting class in college is independence, independence, independence. And so commission sales flies in the face of that, and that's why there's a lot of resistance to that. And what's interesting to me is insurance products have wonderful tax features, tax deferral, tax distributions, tax-free death benefit, and somehow this bias against insurance, because it's commission-oriented, not fee-oriented, has blinded CPAs to the really wonderful planning opportunities from estate planning, charitable giving, qualified plans, and these are the things you and I are going to be talking about.
Yeah.
So that's what I'm bridging.
Interesting enough, I know that about a decade ago, everybody said this is where it's going to go. All products, insurance products, are going to go fee-based and all this, and it did not go anywhere.
Well, okay. I've got a story on that. Remember when the fee-based life insurance came out?
Oh, I do.
Oh gosh, I got really excited about that. I said,
I panicked.
Yeah. So, for years, CPAs have been saying, "Oh, you guys get paid too much, and these huge commissions, all these fees, and this is terrible." And oh gosh, go away. And I'm going, wow, fee-based insurance, good deal for the client, CPAs, the fiduciary advisor getting involved in it. So I started having lunch with these guys and gals, right? And they're looking at me and said, well, why would my client want to pay you when they can get it for free? See, so suddenly it goes from these really high expenses and commissions to free, right? And so I was really disappointed. And then when I really looked at these things, yeah, they had really good cash values in the early years, but by the time 5 to 10 years has gone by, they were back to where they were, and who pocketed the money? It was the insurance companies, not the agent. So it really wasn't good for the clients. The fiduciary market didn't see the benefit of it, and now we have products with high cash value types of stuff for businesses anyway, and they're traditional products. So that all went away.
Well, when I think about when we're talking about insurance products and the revolution and impact that they have in charitable giving, I mean that to me is that's a great launching pad to open. You say, well, I need a new strategy for 2012. Well, this is another area that our producers and agents can get into, and it isn't as heavy. I thought this was going to be too deep, honestly. When I first started looking at this, I said, no way are our guys going to pick up on this. But our guys and gals that are licensed, I think there's a lot of opportunity here. I mean, a lot of opportunity.
Well, yeah, one of the things I discovered a lot of years ago is when you try to go through the front door, there's barriers. People are taught to say, who's calling and what are you calling about? And you walk through the door, no, go away, we don't want any. It's sort of like with social media. Social media is a backdoor kind of sales, right?
Oh, it is.
It has nothing to do with being in your face about selling something. It has to do with building a personal relationship. And actually, I got my first job in public accounting going to an open house for one of the big 8 accounting firms, now the big 4, up in Los Angeles, and got to talking to the head recruiter about California wines, of all things, right? And I was the only junior there. Everybody else were seniors. And out of that, to make a very long story short, I parlayed that into an internship of one of 10 in all of Southern California with one of the most renowned CPA firms in the world, simply because I built a personal relationship with this guy. That's what's going on here is our listeners are going to discover our affluent clients, these high net worth people we all love to have as clients, aren't getting serviced properly in this area. And here's an opportunity to go after that market, be at the parties, have an opportunity to talk about charities, things they're interested in. So it isn't this direct assault to buy life insurance. It's this is interesting.
And it's not just life insurance, because in tomorrow's show we're going to be all in on charitable annuities.
That's right.
I mean, we're going to be all in on that. So don't forget to watch tomorrow's show. Ken, I'm looking at a stat here, and I find it to be fascinating. This stat that says only 10% of affluent people who give money away actually went through an advisor to find out what they could or could not do in charitable giving.
Well, yeah, actually, it's a little different than that. The 90% is correct, but in a different way. There's something like 75-80% of high net worth people use an advisor, where that 10% number comes from the CPAs, attorneys, accountants, financial advisors. Only 10% of the work that's being done came from them, the advisor, asking to help the client, right? Selling their services. 90% of it was initiated by the client themselves going to their advisor and saying, would you help me with this?
Yeah, what do I do?
Now, what does that suggest to you? It suggests to me that the advisors are dropping the ball. They're not talking to their clients about charitable giving. They probably, because they don't know much about it, they don't know how rich an area it is and how many cool things they can do. And so here's an opportunity for our listeners to come up to speed fairly quickly on some of the stuff and start approaching these high net worth people about, gee, I heard you talking about the Boy Scouts of America or the Red Cross or whatever their favorite thing is, and wow, that's really cool that you're that involved. Has anybody helped you reduce taxes on your gifting to these charities? And they go, well, gosh, I've been kind of thinking about that, but I didn't know where to turn. And so, well, gosh, I could help. And they said, well, gee, I've got my own team of advisors. And so, well, have they asked you about this? Well, not really. So, well, you don't really have to replace those guys. Just add me to your team. Let me help you with that kind of thing, and keep whatever relationships you have in place. That's your foot in the door. That's where you build that trust and relationship, and then later on you can segue potentially into other areas.
Well, when I think about a report like this huge study that was done in 2012, and I look at that and I say, wow, 8%, the average person that's giving is giving them 8% of their annual salary. I mean, there's some people in this report that are serious earners.
Well, and actually 8% of annual income, which can be dividends and K1 income and all that kind of stuff. And then an interesting statistic, I think, of a net worth of $2 million, starting at that level, are gifting about $60,000 a year on average. And then it used to be, before the bad economy, $90,000 a year. Well, some of that could go in and leverage some life insurance purchases for endowments or setting up pools of fund for charity on an ongoing basis.
We're looking at all the products that can do this. Again, all this week we're going to be talking about all these products that you can do to not only in charitable giving, but it leverages it. It makes the value of your gift even better. It sometimes can replace a gift.
Yeah.
And we have a whole manuscript on everything we're talking about through one of our vendors on charitable giving. And actually, if you write me on that, I'm going to put that out there too. I'm going to put it out at www.brokersalliance.com/charitable giving. We'll have the 5 videos on this, the 2010 report, and I'm going to include that entire backroom technician brief, because it's great, all on charitable giving. Everything that you want to do. It's going to be huge. I think this is what I'm looking for this week. Charitable giving as a strategy to get into places I couldn't get into before. You're listening to the Business Insurance Zone, the talk show that focuses on insurance in your practice. You can write me on my email address at thebiz@brokersalliance.com or call me toll free 1-800-290-7226 extension 147. Ken and I will be right back after a word from our premier provider of guaranteed term and guaranteed UL, Legal General America.
Banner Life Insurance Company and its subsidiary, William Penn Life Insurance Company of New York, comprise the Legal and General America companies, part of the International Legal and General Group, one of the largest insurance companies in the world. Now, Legal and General America is one of the top-rated insurance companies in America, with one of the strongest financial balance sheet among its peers. Legal and General America is a major player in guaranteed term and guaranteed universal life, and consistently ranks among the best carriers in almost every product spreadsheet. Legal and General America's product line of guaranteed universal life endows at the maturity date, while most carriers' cash values just zero out. You know the reputation of Banner? Now know the value of LGA, Legal and General America. The power to protect, the power to preserve, the power to serve their policyholders. That's Legal and General America.
Well, welcome back to the Business Insurance Zone. I'm Steve Savant, your host, insurance columnist, financial color commentator, and interviewer extraordinaire. And remember, before moving forward with any of the strategies that we talk on this show, especially today and all this week, always check in with your CPA, your tax attorney, and your broker-dealer compliance departments. Remember, you can call us at toll-free 1-800-290-7226 for any of your quotes or questions on life insurance, annuities, DI, LTC, and group pension plans. Hey, it's not what I know, it's who I know, and I'm with Ken Davis today, CPA, CFP, CLU, ChFC. You name the letter, he's got it. Ken, welcome back. And
hey, Stephen.
We're talking about, it's Christmas, it's Hanukkah, it's holiday cheer. We're talking about charitable giving at the end of the year, but actually the things we're talking about could be year-round charitable giving. I mean, it's just, we're just focusing on it because of the season.
Well, and one of the sayings that I've heard that I like is, do you want to give it to the charity, or do you want to give it to the Internal Revenue Service?
Well, let's just see now. Let me ponder that question. Okay, charity.
All right. So as you know, the tax is one of my passions, and saving taxes and rerouting money that would have been given to the government to charities with little or no reduction to the estate to the kids, or if there is, finding ways to replace that. Everybody wins.
I love it because right now, I mean, I'm just hoping that Santa's watching our show because the next 5 days, I'm hoping this makes my list better, right?
Well, I'm hoping too, and maybe we'll go up a few notches.
Exactly. And remember, I just want to tip you off to this now. Uncle Sam is the Grinch, okay? I said that last week. He is the Grinch. My job is to give him the least amount legally under the code. Ken, that's why you're here. When we're talking about charitable giving, especially to financial professionals, I always want to ask this question because I was reading one of your briefs. The challenge of retaining or gaining clients. It's a challenge for advisors.
Sure.
This is another antidote to that.
Right. Well, we talked a little bit in the first segment about the idea of the fact that advisors are not approaching their clients about charitable giving. And in fact, 90% of the charitable plan giving that's done is initiated by the client themselves going to the advisor. Mm-hmm. I think that's just the opposite. 90% should be coming from the advisors approaching the client. The retention issue is another side of that. Is having done investment planning over the years, I don't know about you, but I've actually had clients with several $1 million under management, and they come to me and say, I want to give $50,000 to my church, or $100,000 to the Red Cross, or a couple $100,000 here and there. And while part of it goes, wow, that's really cool, what a great thing to do. Another part of it is your annual fees of 1% start to go down as you've given $500,000 away, and so you're watching this decline. It's not to your competitors, it's to a charity, which is a good thing. So you don't say anything and you support it and help them. But gosh, is there a way to get involved in that? And we're going to be talking in our final segment later this week about how you can get money put into an endowment and actually be named as the money manager for that endowment, so that essentially it goes to the charity and you still have involvement in managing the money for the client now in a charitable endowment setting as opposed to for yourself. So there's how you can maybe retain that.
And heads up, Ken, I mean, I find this fascinating that in some of our trade magazines, I've seen charity endowments looking for advisors to manage their money.
Sure.
Maybe they didn't like what happened in 2008 and 9.
Right.
So there are people actively pursuing somebody that not only knows the code, has financial planning background, but has also a benevolent heart.
Well, and really one of the surprising and pleasant things is I've gotten involved in this area just because I wanted to get involved in. And I knew that ultimately what goes around comes around, and I would get some business, but you really can't go in this in a mercenary way. You have to go out to help, and you have to come across as sincere, and you really have to believe in helping. What happens, though, is people go, oh my gosh, look what he's doing. He's helping us. Nobody's ever helped us. We don't have the money to buy a planned giving officer at over $100,000 a year.
Sure.
And so you step in and help, and suddenly people start tapping you on the shoulder and say, gosh, that's really cool. Can I do that for myself? And we're going to share with you a pretty large case that happened to me in one of our other segments later this week. So it's one of those feel-good things. And with the charities all being in poor shape because of the bad economy and giving, it's really time for us as a profession to step and help show clients how to save taxes and give it to charities.
Yeah, and I think there's so many tactics that we have right now. And again, not only in the information we'll give you, and you can write us go right out and pull this down, including this 5-video series at www.brokersalliance.com/charitable giving. We'll give it to y'all, but there's so many tactics here that will actually leverage the gift to the charity, so the charity makes out even better than they thought, and especially, as you said, in light of the last 2 or 3 years that have been really down in giving. I like what you said. People are looking for people that want to be into this, not as a mercenary, but as a sincere person who's trying to help. Now, I always was told, I can't remember what comedian said this, but he says, if you can fake sincerity, you can fake anything, right? I mean, so we're not looking for actors here, right? We're looking for real people. But Ken, one of the big bugaboos and great fears and trepidation of people who actually want to give are concerned about their retirement projections. And so this is one of the things I was reading in your brief. This is one of those things you want to attack up front in some of these engagements when you see a little bit of pullback.
Well, this is where we play, and I don't know about you. I don't care how much money people have. Mm-hmm. They're always afraid of running out of it. I've had clients with $300,000, $1 million, $10 million, and they're worried they're going to run out of money. And I can understand that. They're retired, they're in their 70s or 80s, and they watch the world around them, and there's a lot of fear. And so, and they see their money as one big pool of money, one pot of money. And the advisors can come in and start breaking that and say, okay, we get this piece that'll take care of you for the rest of your life. And then we have this piece that can be used to take care of your kids, and this piece over here can go to charity. And financial projections or retirement projections using the advanced methodologies that our financial planning profession has, Monte Carlo simulations and stuff like that, can actually say, okay, what's the probability of success? You can actually sit down with all this number crunching and work with the client and say, okay, here's the conservative things. We used a 4% inflation rate. We used a 4% rate of return, and we did this and that. We did this conservatively, and based on all that, you got plenty of money. And then just to be ultra safe, we're going to put $500,000 in CD somewhere, and so that you've got backup for things that you couldn't anticipate. Then you do your long-term care. And so you just cover the whole thing, make sure the client knows they're okay. Then their second concern is, and maybe their fifth concern, and I used to joke with my clients, I said, after I take care of you, first, second, third, fourth, and fifth, then is it okay to take care of your kids? And then they get it, and they laugh because they keep coming back. Well, okay, take care of me first, because they have these fears. So then you take care of the kids, and you can do that with wealth replacement trusts, putting life insurance into a trust, using some of the tax savings and deductions. You can actually turn around and buy life insurance with the deductions you got to take care of the kids. And then ultimately you take care of the charities. But those are their primary concerns, is take care of me first, second, third, fourth, fifth, and then take care of my kids if it's convenient, and then ultimately we want to help charity. In some cases, they have so much money, they're concerned about the kids having too much money and not being productive and working in the world. So they want to give a large, I think Warren Buffett just has massive amounts of money, and that's one of his huge concerns, is a vast majority of it's going to charity.
Well, when I look at this, we all know this phrase, because I have to say this. I've been in there 30 years, and I didn't hear this phrase used before. This is unique to me. I've heard the thing called cost of living, but you talk about this thing called cost of giving. How do I reduce my cost of giving?
Right.
Talk a little bit about that, because I think that's a key issue. I want to give. How can I give? Oh, now you have a tactic that can actually reduce the cost of giving.
Yeah, what's interesting is when you look at qualified plans, IRA, stuff like that, even deferred annuities, you have to deal with two potential taxes. One is if they have a large estate, there could be an estate tax at current rates of 35%, and historically up to 50%. And that could come back with a vengeance in 2013. We don't know what's going to happen there. And they get income taxes. And what's interesting about this is the client could have absolutely no estate taxes with a $5 million exemption for husband and or wife. And I call this the middle class estate tax. Nobody talks about doing estate planning for middle class people. What I mean is people get $100,000, $500,000 sitting in an IRA. Well, they don't have an estate tax, but what do they have? They have an income tax. And our income taxes between state and federal, for instance, in Arizona, might be somewhere in the 40% category. If suddenly you're a only child, mom and dad, worked forever and had $500,000, and they drop it in your lap when they die, $500,000 comes into your gross income in 1 year. What do you think that does to your tax rates?
It's a killer.
It's through the roof, right? So not only does that get taxed, but other income gets taxed at higher rates. And so 40% out the door, that's $200,000. And charitable giving, we can talk about how we can get rid of some of that.
Well, before you get back to the charitable giving, because as a thought just went through my mind, we a lot of people, the threshold for estate planning, at least this year, right, is quite high.
Right.
But that has nothing to do with estate taxes at the state level.
Right.
I mean, there are so many states. I mean, there's some states that are really low. I'm thinking of a couple of them out in the Midwest, $300,000, and you're paying. So
Yeah.
it's not just I don't have an estate tax problem. I might have a state tax problem. I definitely have a income tax problem to the people who receive it, like you
Right.
suggested.
Right.
So we're talking about charitable giving, which is normally for the high net worth philanthropy. But you're saying, oh no, middle class, there's a way to play here without, again, taking money away that they may need for retirement.
Well, yeah, exactly. And what you can do is you can say, gee, I've got this money over here. I've got some other assets over here, and I've got enough income, even though I'm middle class. And I'm going to take some of this money, and I'm going to fund a policy that I'm going to leave to a charity. So, you might think, well, gosh, my $1,000 a year or $5,000 a year isn't going to make a big difference in this charity's income statement. But if suddenly you're starting to fund a life insurance policy for $5,000 a year, a second to die on a husband and wife, oh my gosh, the amount of leverage that you can purchase with that. And then you leave the whole thing to an endowment fund when you pass away. I mean, suddenly you're leaving $250,000, $500,000, $1 million to a charity, and you go to the charity and say, gosh, I love you guys, and I really can't give a whole lot of money, but now I can buy this big insurance policy, and you're going to get this when I pass away. Is that cool or what?
It's cool, and remember, big hearts, small wallets. We're going to pick all this up tomorrow.
Well
you
said.
can watch this show on HD 1080p on our on-demand section at Brokers Alliance homepage on www.brokersalliance.com, and of course on all our social networks, YouTube, Vimeo, Facebook, LinkedIn, and Twitter. I'm Steve Savant. You've been listening to the Business Insurance Zone. That's the buzz on the biz for today. Get in the zone, the Business Insurance Zone.
This has been a Bravo video event of the National Insurance Clearinghouse, the marketing arm of Brokers Alliance, one of the largest distributors of insurance products and services to a nationwide network of insurance professionals. Need insurance guidance? Call Brokers Alliance. The Business Insurance Zone